All right. What's up, y'all? Welcome to What the Fuck is Happening with the Fed again. I'm here with Christian. It's your boy Colin. What's good, Christian?
It's going good, man. 12 days till the halving. It's getting fucking real. In a world of quantitative easing, Bitcoin is tightening. It's awesome.
Bitcoin ripping, man. Major assets all, rallying yesterday. But Bitcoin, like, literally outdoing all of them by a factor of at least 5 mostly. Yeah, like S&P was up too. You flexing. S&P was up like 2%. Bitcoin up 12%. Okay, baby. It's cooling off now, which I'm kind of happy with. I didn't want to see it rip. I'm still trying to get those cheap sats, baby.
Some people sell the top. I just don't buy the top. And then as soon as it goes back, I keep buying again. So not buying is my version of selling.
Right on, man. Well, we have a great show for you guys today, but let's get business done first with our sponsors. First up is Swan Bitcoin. Swan Bitcoin is the best place to get low-fee Bitcoin, and you can automatically dollar cost average, set up your amount for a weekly buy, daily buy, monthly buy, whatever you want. It's extremely customizable, and they do delayed settlement on your Bitcoin, so you can get the cheapest fees on the market. Highly recommend you check them out. Check out swanbitcoin.com, and yeah, go hit them up, guys.
Next, if you are more of a trader, less fiscally responsive than those sat stackers using Swan, you can go to Etoro.com to satisfy your need to trade. But Etoro is the best place to trade. They have every kind of trading feature you would want in the cryptocurrency market. You can buy and stack your Bitcoin on Etoro, or you can go do some elaborate index fund investing, or you can even copy an active trader's trading strategy. So they really offer every single tool you can imagine to be in crypto and actively trade. Check out Etoro at etoro.com.
Or if you want that cypherpunk grind, you can download Bisq, run your own instance, and trade with Bitcoin's only true decentralized exchange or decentralized ordering book, whatever your semantics are. But Bisq is really cool. Kristen's used it. I've used it. Great way to take, your trading into your own hands, become even more self-sovereign. It's run over Tor. You get to make direct peer-to-peer trades with a bunch of people all over the world. They have a bunch of different payment options like Zelle, checks, cash in the mail. I mean, it's wild, y'all. Go check it out, Bisq.com.
You didn't say this at the beginning, but we had Andy Edstrom on the podcast, and he is a CFA and now the head of institution at Swan Bitcoin, one of our sponsors. And this was a really fantastic conversation. Yeah,
Andy's got a really cool, like you were saying, just a good background for Bitcoin. I was telling him at the end of the show, it's good that he's kind of got the CFA background, traditional finance type guy, because it's good to have those dudes in the industry, especially when you got a lot of like long-haired hippie types like me ranting about toppling the government with Bitcoin. He's got really cool theses on intergenerational tension as a result of the Fed's monetary policy. We talk a lot about housing prices, education, cost of college, all that good stuff. We also talk about short-term deflation and why Andy, unlike Ansel, our guest for last week, thinks that the deflation isn't going to last very long and that inflation won't be too far behind. So excited to show it to you guys, and let's just dig right in. What's up, y'all? Welcome to the next episode of What the Fuck is Happening with the Fed. I'm your host, Colin Harper, and today I'm delighted to be joined by Andy Edstrom. A CFA by trade, but with a new job title actually coming fresh out the box. I think this is you're kind of going public with it, isn't it?
Yeah, that's right. Great to be with you, Colin. Yesterday, it was announced that I would be taking on the mantle of head of institutional for Swan Bitcoin. Swan is the one and only Bitcoin company that I have invested in, and I can't imagine, a company that's more aligned with my vision of the world as it relates to Bitcoin, helping people stack sats, DCA, dollar cost average over time. And so yeah, I'm pretty psyched to have joined the team in a formal role. I was already an investor, But I'm psyched about the opportunity to do my small part to bring Bitcoin stat stacking to the masses.
Heck yeah, man. And congratulations. Beginning to work in Bitcoin's awesome. And as all y'all know, Swan Bitcoin is a sponsor of the podcast. And we love the service, low fees, auto dollar cost averaging, beats, Coinbase and Cash App. So great place to stack. Y'all should check them out. Check out Swan Bitcoin. And you should also check out Give Bitcoin too, if you want to give people the gift of Bitcoin and explain to them what it is. I've used that for some people. Highly recommend it. But swans aside, maybe, or white swans aside and Bitcoin swans aside, maybe we should get to the black swan that is the macro economy. And we chatted a little bit before we started recording the podcast. And you're really big on this thesis of how Fed and central banking monetary policy, and especially this kind of like chimera or the beginning of MMT with the blending of fiscal and monetary policy, is going to drive intergenerational conflict. So I think that's really a great place to kind of serve as a springboard for our conversation. What do you view as being the driver of this intergenerational conflict, and what does that look like? How are we seeing this play out?
Yeah, absolutely. So there's several factors, several angles, I would say. And I hope you'll humor me a little bit, but I'm going to read just a couple paragraphs from my book because this is straight on point. Absolutely. So this is a fictional conversation that I have with my little brother, who is real. He's in his low 30s. He's a doctor in Boston. And the conversation goes something like this. So I say, great news, brother. Low interest rates have helped reduce your housing cost of living, right? Because rents are cheaper. And he says, yeah, but I don't want to rent for the rest of my life. I want to buy my own house so I can raise a family. So I say, oh, no problem, bro. Mortgage rates are lower, so you can afford the same mortgage payment as people did 30 years ago when houses were much cheaper. And he says, yeah, but those low interest rates have raised home prices so rapidly that now I have to scrape together $200,000 of cash just for the 20% down payment on a starter house in a major U.S. city. So despite being a doctor with a higher income than most people my age, it would still take me years to accumulate that down payment. And that's if I wasn't saddled with student loans. And so I say, well, good point, but at least you'll be well provided for in retirement, due to the fully funded Social Security and Medicare programs. Haha, right? So this encapsulates it in a nut, right? So right. Social Security and Medicare, as we've all known for literally decades, are bankrupt, right? They're unfunded. There are literally a couple $100 billion of unfunded liabilities. So the younger generations are still paying into that system, and they have no hope of recovering, that quote unquote investment. So that's one. And then two is, yeah, interest rates are lower, but that gets fully capitalized in the cost of housing. And so even though your mortgage payment might have been the same today as it was 30 years ago, you got to stump up twice as much down payment, to afford that house. And then I add on the fact that the millennial generation has now experienced two major economic downturns and financial crises, right? We had the global financial crisis 2008 and 2009, and now we've got this one. And the research says that going through that at a formative time in your career, essentially earlier in your career, permanently impairs your economic prospects basically for the rest of your life. And look, the hardest working, most talented millennials will still hustle and they'll still make stuff happen. But when you look at the entire age group, you see that it's just a painful time basically to have come of age relative to modern U.S. history. And then I fold into that sort of the other side of it. Now, by the way, I think the millennials in general, I'm generalizing, are starting to figure this out. And obviously what's going on lately has just shown a spotlight on it. But the other side of it is, what are the boomers thinking, or what are the older generations thinking? And I just had this conversation with one of my family members. I won't call out specifically who it was. And we were talking, we were debating, and I said to him, I was like, look, it's not clear that all this debt that we're incurring at the government level and all this money we're spending to support the economy right now, it's not clear that it's worth it. especially, with respect to how the dollars get allocated, as well as who benefits and who pays. And his response was, well, and specifically I said, well, look, it's not clear if it's worth it to spend all this money for the benefit of the older generations, who are the ones who are likely to die, right? They're far more likely to get taken out by the coronavirus. And his retort was, well, of the $2.2 trillion in the CARES Act, that was the first round, only 100 billion or whatever is going to healthcare expenditure. And this is the misunderstanding, right? The point is not that we're spending, 100 billion more on healthcare right now. The point is that we're incurring literally trillions of dollars at the government level, which the older generations, aren't going to pay back because they will have passed away before that bill comes due, and that's just going to fall on the shoulders of the younger generation. So that's a bit of a rant, but that's sort of some recent color, and we can get into more detail on how the dollars shake out, but that's where I'll leave it.
Well, there is a short-sightedness in terms of the consequences, right? It's a generational consequence that supersedes their own lifetime. So, or multi-generational consequence, truly. And without getting into to climate science, it's something else that I've had conversations with my dad about in terms of, let's assume that the climate science is right for a second. Some of the boomers don't care about it as much because it's not going to affect them. Right. And, I don't want to get into debate with anyone necessarily right now about the merits of modern climate science, because I know a lot of Bitcoiners who have some things to say about narratives.
Yeah.
But to your point, as a millennial myself, man, I've seen the housing market really pop off, especially in Nashville, where I live, where it's been exacerbated by a booming city. And the houses that seriously, man, you're seeing houses that 5 years ago were $70,000 and now they're selling for 250. And you see stuff like that all across some of these cities like Austin, other ones like, the big ones like Chicago, New York, and all of that, they were always, but like you were saying, everything's booming.
Yeah, and absolutely. And it just makes, it just sets you back. Everybody's personal situation is different, obviously, but scraping together the cash to make the down payment on a house has never been, it's never been harder. And now, I'm imagining, 20 somethings all over the place who are out of work, and, hopefully they're getting a check from the government, but that doesn't basically fill the gap. Number one, in terms of actual cash that's needed, to run a household, and number two, in terms of just lost, experience. That's just something that's hard to come back from.
And you have a generation of kids basically wasting equity, or what could be equity potentially, in a house, because they have to pay it on rent, because they don't have the upfront capital to stake to finally get equity in something. And going back to one of your points about what you were saying to your brother in that hypothetical conversation, or a very real conversation that was then turned into a hypothetical,
right.
Which really is, I think, a great little encapsulation of the problem. The easy credit lines have inflated many other markets, including healthcare and education as well. People talk about the cost of goods. Certain goods, obviously, like basic consumer goods and electronics, have actually been deflated in prices over the years.
Yep.
But really critical ones haven't. And you're seeing, and that's why a lot of millennials are pissed off and straddle with student loans as well. And I think that that's contributing to some of that intergenerational tension.
Absolutely. And what's interesting, again, I write about this in some detail in my book, is so the ones you mentioned are the crucial ones. And healthcare, I'll sort of set aside for the moment, because that market
super
is
complicated.
Yeah, super complicated, so uniquely dysfunctional for various reasons that's a whole discussion in itself. But if I look at the other two you mentioned, that's housing, which we talked about, and then it's education. What's interesting about those two things is they're both mainly capital goods, or partly capital goods. So if we take the Mises Austrian categorization of goods, right? Capital goods, consumption goods, monetary goods. And if you print more of the monetary good, then it flows into the capital goods and the consumption goods. Well, anything that's part capital good has seen its price go way up, and that's housing, and it's education, right? Because really education, if you study the right stuff, which people attempt to do, they don't always succeed, at least in terms of an economic, return. It's noble and good. Yeah, exactly. I mean, it's okay to study stuff that doesn't have an economic return, but for the most part, if it's an investment, then yeah, that's effectively capital good. And so any capital good has been, huge, has had this huge pressure upward in price, and that includes both housing and education, in my view.
Yeah, and something that you can see, it has these auxiliary effects too that people don't really see as being inflation because they can't necessarily be measured in dollars and cents. But so part of the thing driving tuition costs has been administration bloat in colleges. Another thing that has also been driving it has been major bloat, especially, and you see this in liberal arts colleges as well. They want to drive tuition, so they have a lot of very obscure majors that kids can't get anywhere else.
Yep.
Part of what you have with this too is, once you flood the monetary base, you then flood the capital markets. And if one of these capital markets is education, one of the side effects of this is this kind of educational inflation where you have too much new talent in the market. And there aren't enough job prospects to keep up with the people being flushed through. And you have bloat in terms of what people are studying. So suddenly you have kids paying $50,000 a year to go to a liberal arts college, and they end up being a barista or a bartender.
Yeah,
right.
It's a big problem. I mean, what's interesting, and this gets into sort of bigger questions of what does the economy look like, or what did it look like in past decades? What's it look like today, and sort of how is it evolving? There definitely was a period of time in which, and this is how I was raised also, by the way, it was go to a good college, achieve a degree, work hard, pick a profession. And once you get sort of into the profession and, credentialize therein, like everything should be okay, basically, right?
Upwards mobility.
Exactly. And that model, worked maybe for some subsegment of the population, but not everybody can do it. And yeah, it became this mantra of don't think about it in terms of a rate of return or as a a financial investment. Just assume that investing in education pays a dividend and it's worth it. And so just keep your head down, go get the college degree, and as you say, whatever major, and you'll be fine. But as the harsh reality of the outcome is that you're not always fine, and a lot of that time and money spent on education was did not have a financial return. And then you layer on top of that the whole for-profit college phenomenon, where this is another stat I have in my book is I think it's the 6-year graduation rate, right? Not 4-year graduation rate, but 6-year undergraduate graduation rate is like 30% at for-profit colleges, right? So it's like 2/3 of the class never graduate. They pay tuition, they incur debt, and usually they don't even get a degree in a reasonable amount of time. And as you say, even if they get the degree, it's oftentimes not marketable. So it's a huge bummer.
It is a huge bummer. And then really what a lot of it is too, especially with those liberal arts majors, I was an English major. I was very thankful to be able to monetize that into something that was editorial, right?
Yeah.
But some of these kids, you get a liberal arts major, and then the next step is you have to get a master's. Well, I'm really worried that if I have kids, they're going to have to get a PhD to teach high school English. Like I feel like that's eventually like the end, like the end game of all of this is credentialism. Like, I mean, at this point, when I was trying to enter the job market, entry-level jobs, I needed 2 years experience.
Yep.
And I was like, I eschewed internships in college because I needed to make money too. Yeah. Like I couldn't do editorial internships. I needed to go be a server so that I could make cash to hang out with my friends.
Totally, man. You got to earn your beer money, or a lot of people are paying for tuition, right? And tuition levels are higher than they've ever been. So anybody, who has to sort of pay their way, then they can't get on the career ladder, quote unquote, right? Because they can't get the right internship early enough, which prevents them to get, or makes them less competitive in getting, the optimal job right out. And it just all snowballs.
Yeah. And
I'm glad things have worked out for you though. You're on the right side of things.
That's what I'm trying to tell all my buddies too. I mean, some of my, like one of them, he's a perfect textbook example of this. Really industrious, smart guy, like critical thinker, really good at self-study, but he hated school. but his parents just kept pushing him and pushing him and said, you got to get a 4-year degree. But the dude is really good at like learning on the go. He's learned how to, he bought a van, fixed it up. He's an arborist by trade. He does other carpentry and things like that.
Mm-hmm.
And, you know,
sounds like a handy guy.
Yeah, man. And he would have just been better going to like, you know, a trade school or something where he could have done that instead of having to incur all this debt going to a school that he didn't really, you know, he got a lot of social benefits out of it and a lot of friends, but the practical education is just not there. And you see it in so many levels of education. How many, you know, I never had a basic civics class, economics class, or just like a class on what I could expect when I got out of college. You know, here's how you do your taxes, any of that stuff.
Yeah, I had the same experience. I took a liberal arts degree, although I did study economics. I did an econ degree. I studied a lot of psych and I studied a lot of math. But even within the econ degree, first of all, it was 100% Keynesian, right?
Yeah, just like
no mention of the Austrians. Like they never existed, not a thing. Which prepared me very poorly, right, for understanding Bitcoin, or even understanding gold for that matter. So there was that, and then as you say, very little or no practical experience, and really, you know, in my opinion, that should be pushed down even, you know, to the high school level, right? I mean, basic financial education. It does make you wonder about whether it's not by design, right? It makes you wonder if the powers that be aren't.
Yeah, you sound crazy, and people call you a conspiracist. But like, why wouldn't we teach children basic, you know, good money sense? The only logical conclusion is that they want you to spend money at a rapid rate, so that you can't actually, you know, keep any of it. All right, so we've got all of this, like, you know, educational inflation and the credit markets ramping up asset prices across real estate, education, healthcare, all that stuff. But for our episode last week we had with Ansel, you know, we're really in a period of deflation right now, right? Oil futures just went negative. Prices are dropping. Nothing's stimulating the economy. So I kind of want to get your take on short term, what you think we're going to experience, and also kind of what the end game of this intergenerational conflict is and the Fed's monetary policy right now.
Yeah. So of course, you know, it's risky to give exact timeframes and, you know, try to estimate how it all plays out, because we're literally in unprecedented, you know, times and on, you know, untested ground. But I'll give it my best shot. And by the way, you know, I've had this debate with Ansel actually recently on the Swan Signal, you know, podcast in detail. But in a nutshell, the way I see it is, yes, short-term deflationary, huge demand shock where if the average person is stuck indoors, you know, then they're not spending on stuff. And then, as you pointed out, you know, anything transportation related, you know, commodities stuff, you know, huge decrease in price. And so the question is, how long does that last? And obviously the Fed and other central banks are printing literally infinite, you know, unbounded amounts of money to counteract this deflationary force. My view is that they will succeed eventually. And the question is, how long does it take? So I don't know how long the pandemic's going to last. I really just don't know. Like, how quickly can we open the economy? You know, is it sort of stop start? You know, which of the therapeutic, you know, treatments work and which don't? When do we get a vaccine? Do we get a vaccine? You know, do people, you know, actually abide by the rules or the norms, you know, of keeping a lid on this thing? So I don't know how long it takes, but let's say whatever it takes to get past the pandemic. So then the question is, how long until inflation? I think we have to acknowledge that the Fed has put in writing, okay, in recent FOMC statements, they've been talking about how the inflation target is quote unquote symmetric. What that means is, according to their measurements, which, you know, we can debate, but according to their measurements, they've been undershooting the inflation target already for years. So they've said, look, it'd be okay if we overshoot for a while. Number one. Number two, they've said literally there's no limit on how much money we can print. So that all tells me that ultimately we get to inflation. You know, before the crisis would have said it probably, you know, could take a decade. Now I don't think it will. You know, I think it's more like 5 years, although others, you know, think it could take longer. The thing we don't know about is there's the whole human psychology element, right? So far, the velocity of money has been quite slow, or been quite low and falling since the financial crisis. And so the question is, how long do people hoard dollars, or other fiat?
And cutting in really quickly. Yeah. Can you, for some of our listeners, just give a brief explanation of what you mean by velocity of money?
Yeah, exactly. That's the whole the monetary equation. Money quantity times velocity equals price times quantity, and basically what it means is GDP, or total activity in an economy, equals the amount of money times the velocity, because GDP is based on actual transactions that occur, and the total amount of transactions that occur, since half of every transaction is a monetary transaction, is the amount of money times the number of times that dollar, let's say, gets spent. And the velocity, so that's the equation. And the velocity has gone down since the global financial crisis. And what's interesting about that is we don't really know what drives monetary velocity. And largely it's psychological.
I might be an idiot when it comes to economics, but...
Well, so are the economists, it turns out.
Well, I would have thought the velocity would increase if liquidity is easy. Yeah. I guess that's where the Cantillon effect comes in, right? I think it's concentrated in the upper echelon of society, right?
I definitely agree that that's a factor, which is, yes, if most of the newly printed money, as you say, through the Cantillon effect, flows to the rich on average, and the rich tend to spend a lower portion of their total assets or their total income, than everybody else, then yes, that I agree reduces the velocity. I think also, part of it, the psychological element, is just how likely am I to hold on to dollars? I'll speak for myself. Okay. Lately. So lately, what have I been doing with my income? I'm not going out and buying a bunch of stuff. I'm still dollar cost averaging my Bitcoin, right? I'm still accumulating. But, if you ask me, what do I want to hoard right now? The answer is dollars, right? I am, nervous about the long-term economic effects of this pandemic. And I think I'm probably not the only one, especially considering that, I still have a job. I mean, yes, my income will probably be reduced, due to, assets being down. And that's, the nature of how I make money. But, I'm relatively lucky, I still got a job. I'm not out of a job. I think the average person out there is probably nervous, and they're less likely to spend those dollars that they're taking in, and they're more likely to hoard them. But the psychology element is when is there an inflection point, and when does that change? And what might cause the change? Well, one thing that might cause the change is more and more headlines about the government printing more and more dollars, as well as, every day that goes by, let's say with Bitcoin, that it, doesn't fail, basically. It gains mind share, and people start, continue asking, oh, this thing's been around, 10 years and 11 years and 12 years, and why hasn't it failed, and what's going on here? So, and then human psychology in terms of the herd, the masses, can turn, almost on a dime. I mean, history is littered with examples of governments, oppressive governments that were all dominant, all powerful, until some event occurs, and then, public perception shifts, and all of a sudden something that was there before isn't. People realize the emperor has no clothes, and you get a shift. So the counter argument that probably Ansel and others would make is, well, look at Japan, right? Japan, has even more debt than we do, and they just keep printing money, and they're still stuck in deflation. And my counter argument to that is, number one, Japan is different than the US, right? They got worse demographics. They are a much more homogeneous society, right? They all sort of pull in the same direction. And number three is most of the government bonds are actually owned by Japanese citizens. So there's not that risk of the debt market sort of falling apart. But the second thing to consider is, just because they got, to government debt to GDP of over 300%, doesn't mean that we'll get there. And it also doesn't mean that, there's some bright line where 300% of GDP is okay, but 301%, is too much. And if they got to 301%, well, then we can get there too. No, if at some point, the Japanese government bond market, starts to show stress, then everybody else in every other financial market is going to be looking around and saying, oh, well, maybe the U.S. can't borrow infinitely. And therefore, maybe there is credit risk. And therefore, maybe I don't want to hold so many dollars. And therefore, people start spending those dollars, getting rid of them, and the velocity goes up. And that's when you risk inflation. So that's
nice.
Yeah. I mean, and so then the question is when, and we don't know. I mean, I wish, some will say that we'll live in this deflationary funk for another decade or two. I heard an interview, I can't remember, on some other podcast about a investment manager who was talking about how the great inflation will come, but it'll be his grandkids that have to deal with it, right? Like decades and decades from now. And I don't know, I don't see it taking that long.
Well, I think, people's time horizons are all screwed up. But, let's just think about how quickly things have escalated. 2020 was all fine and well. And then Trump started taking COVID seriously. And then America shut down. And then Republicans are sending out UBI.
Amazing?
It took 1 month for a Republican president to give people free money, to literally become a socialist. And so people, like you were saying, psychologies can change very quickly, especially when people feel threatened. And for one of the things that I think you were pointing out too, it's like people were like, oh, it's been around for 11 years. It's been around for 12 years. Yeah. Bitcoin is all about people's risk appetite. Once it stops seeming so risky, that's going to really change people's minds. And it's starting to, like I said, my friends, they're starting to not see it as one of my friends said, the one who is really crafty and we were talking about, he said, I was talking to him about Bitcoin and red pilling him one day, and he said, get me off this hot air balloon. So I think people will start having similar thoughts, especially, since inflation could not be very far away.
I like that, dude. You got to meme that if you haven't already. Get me off this hot air balloon. The Fiat hot air balloon.
Hell yeah, brother. Well, Andy, is there anything else that we didn't touch on that you wanted to kind of get out in this episode? I've been really enjoying it. I mean, you've got some great points. I think you really boiled down a lot of these topics pretty well.
Pleasure's mine, Colin. Obviously there's so many levels to this, and I have a view, and there's a lot of ways it could play out, but for me, all roads lead to inflation and hopefully to Bitcoin. Obviously I'm doing my part, and I'll shill Swan Bitcoin, which is an on-ramp for auto dollar cost averaging. And then, of course, I'll shill my book. It's called Why Buy Bitcoin, Investing Today and the Money Tomorrow. It's on Amazon. Follow me on Twitter. My handle's Edstrom Andrew, and I have a personal website with other podcast appearances and stuff, and that's andyedstrom.com.
Heck yeah, man.
Cool.
Thanks.
We'll keep up the good work, Colin. We really got to keep working to tell people WTF happened and is going on, and you guys are bringing good word to people. So keep it up.
We're trying to, man. Thank you. We appreciate having guys like you, especially dudes like a CFA or just like some legacy econ guy really getting plugged into Bitcoin. It helps because it makes, the dirty hippies like me look a little less crazy.
It's great, man. I'm the dirtier. I come from the dark side. I was born and raised on the dark side of finance. I've been a financial rent seeker pretty much my entire career. So, we're all going to wake up to it at one time or another, and we're all doing our part to bring it to everyone.
Hell yeah, man. Well, thanks for coming on. Take it easy and stay well with all this craziness, huh?
You too, man.
A quick reminder that all of the content in this episode is for informational and entertainment purposes only. You should not construe the information as legal, tax, investment, financial, or any other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, or offer by BTC Media, the Let's Talk Bitcoin Podcast Network, or any third-party service provider to buy or sell securities or any other financial instruments. Do your own research.